In the pursuit of wealth, every investor inevitably faces loss, sometimes small, sometimes catastrophic. When fortunes shift, emotions surge, and fear threatens to control decisions. Yet, history's wisest thinkers remind us that loss is not destruction but a teacher. The Stoic approach reframes pain as preparation. Financial markets don't promise mercy. They mirror human behavior: greed, fear, hope, repetition. The Stoic doesn't try to predict these waves but learns to surf them with calm precision. What breaks most traders is attachment, not loss itself. Detachment is the first Stoic investment strategy. 2,000 years ago, philosophers like Seneca and Epictetus faced disasters that dwarfed any portfolio downturn. Empires fell, ships sank, fortunes vanished. Yet, they trained the mind to remain steady amid chaos. Today, this same discipline separates resilient investors from reactive ones. The Stoic approach begins with control, understanding what we can influence and what we cannot. Market returns, currency swings, global events, all powerful but external. Our perception, our response, our values, that's internal territory. The Stoic invests in mental equilibrium before financial opportunity. When financial loss strikes, most minds spiral into self-blame or panic-driven action. But the Stoic pauses. Through reflection, they recognize that wealth is temporary utility, not identity. The portfolio shrinks, but the mind expands in calm assessment. Emotional regulation becomes the strongest currency. Modern finance often glorifies speed, fast profits, fast trades, fast decisions. Stoicism teaches the opposite: stillness. It invites investors to slow down and process reality without embellishment. Slowing mental time allows long-term clarity and protects against short-term irrationality. The Stoic sees the market as a proving ground for virtue. Patience, discipline, flexibility, these are the hedge funds of the soul. When loss occurs, it's an exam, not a verdict. The Stoic doesn't ask, "Why me?" but "What can I learn from this unfolding lesson?" Financial freedom begins with freeing the mind from fear. Stoics remind us that money has no true power unless we assign it meaning. If meaning is based on numbers, we remain enslaved. But if meaning is based on purpose, every fluctuation becomes interpretation, not punishment. In Wall Street boardrooms and suburban kitchens alike, the emotional weight of loss is universal. Yet the Stoic lens reframes loss as an audition for resilience. Each downturn becomes a mirror reflecting our maturity in handling impermanence. Strength grows when comfort fades. Seneca once wrote that wealth is a servant, not a master. The modern equivalent is the balanced portfolio serving a calm investor, not the other way around. Debt and desperation stem not from lack of money but from lack of mastery over greed and fear. Financial losses test belief systems. Many chase profits as validation. But Stoicism calls for identity beyond returns. When identity expands beyond net worth, setbacks lose sting. The Stoic investor's dignity remains untouched by the rise or fall of markets. Emotions distort value perception. The Stoic, through daily mental rehearsal, builds psychological armor. Visualization of potential loss beforehand dulls the anxiety of real loss. This premeditation on adversity transforms fear into familiarity, surprise into acceptance. Imagine a trader confronting a 50% drop in portfolio value. Most would wallow or panic sell. The Stoic, instead, analyzes with serene detachment, what external factor changed, and what internal judgment magnifies this pain. Emotional literacy outperforms technical literacy under pressure. For a Stoic, gratitude and loss coexist. They wake each morning acknowledging impermanence. Every possession, no matter how grand, is borrowed time. This gratitude liberates from dependency. When markets fall, they thank volatility for reminding them that time, not cash, is the ultimate wealth. Financial news cycles breed urgency. The Stoic filters noise through reason. They consume data like a scientist, not a gambler. Stoics limit exposure to sensational media and focus instead on long-term fundamentals, discipline, cost control, intelligent diversification. Every financial decision carries invisible emotions: hope of gain, fear of loss. Stoicism cultivates awareness of these impulses before acting. An investor who can identify internal bias is less likely to follow crowds. Independence of mind creates independence of wealth. Accepting loss doesn't mean approving of it, it means refusing to suffer twice. The first suffering is material, the money gone. The second is psychological, the endless replay of regret. Stoicism teaches us to eliminate the second entirely by aligning thought with reality. Corporate collapses, recessions, crypto crashes, these are not modern inventions. Ancient merchants faced storms that sank entire fleets. The Stoic secret wasn't the avoidance of risk but the embrace of readiness. Expect volatility as part of life's natural rhythm. In cultivating a Stoic wealth mindset, we practice neutrality toward outcomes. Gain does not elate beyond reason, loss does not devastate. Emotional symmetry breeds consistent decision-making. Consistency compounds, psychological interest that yields wiser moves over decades. Philosopher Marcus Aurelius ruled the world's largest empire and wrote daily meditations reminding himself of humility. Power and loss lived side by side. His lesson to modern investors: mastery is internal. Even when materially rich, stay spiritually unshaken. Economic depressions expose society's emotional deficits. Panic, not scarcity, destroys the most. The Stoic investor acts as ballast, heavy, grounded, and rational, when others rush for exits. This composure attracts opportunity amid chaos, proving serenity itself is profitable. Understanding loss as data, not drama, shifts mindset. Each failure is a feedback loop. Stoics interpret losses scientifically, identify cause, adjust principle, continue forward. The process transforms financial setbacks into serene curiosity instead of emotional implosion. Minimalism, often seen as a lifestyle trend, actually embodies Stoic discipline. By limiting dependency on possessions, the mind gains room to think. Wealth then becomes functional, not ornamental. The fewer the attachments, the lighter the heart when markets stumble. The Stoic investor separates worth from wealth. Worth is who you become in the storm, wealth is simply what you steer through it. When the latter is lost, the former reveals itself. That revelation, character under pressure, becomes the highest return on investment. Practicing Stoicism in money management requires daily reflection. Journaling after market close, assessing emotional balance, calibrates decision-making. This ritual serves as a mental audit, ensuring values haven't drifted into vanity or fear. Audit of self before balance sheet. A Stoic welcomes adversity because it sharpens judgment. In financial terms, downturns prune poor strategies. Each loss clears illusion. The economy becomes classroom, volatility, the instructor. The mind that studies calmly graduates into long-term stability. Freedom from fear empowers long-term vision. When daily market noise fades, horizon widens. Stoics teach delayed gratification as emotional cash flow, by sacrificing momentary excitement for enduring peace. Long-term wealth grows where emotions no longer negotiate. Instead of chasing speculative trends, the Stoic values clarity of intention. A portfolio aligned with personal philosophy outperforms one built on imitation. Think less about what's popular and more about what's principled. Authentic conviction compounds stronger than any index fund. Even in prosperity, Stoics rehearse loss mentally. This is not pessimism but preparedness. By visualizing potential decline, gratitude deepens, attachment weakens. When reality aligns with prediction, panic disappears, replaced with calm acceptance of impermanence. Society equates financial loss with personal failure. The Stoic dismantles that illusion. Money lost is not character lost. Measured self-respect in lean times signals mastery beyond markets. True wealth lies in equanimity others cannot steal or devalue. In practice, Stoicism thrives in consistency, spending within values, investing systematically, thinking before reacting. Each financial routine strengthens inner peace. Wealth management turns spiritual, discipline replacing desire, prudence replacing panic. The paradox of Stoic finance is that those prepared to lose gracefully often end up gaining consistently. By relinquishing obsession with control, they earn stability. Detachment builds endurance, endurance builds wealth. Serenity becomes competitive advantage. To apply Stoicism today, make silence part of decision-making. Before reacting to a red market day, pause. Thoughtful restraint beats frantic reaction. In that pause lies dominance, the quiet edge separating masters of money from slaves to momentum. Ultimately, the Stoic approach to financial loss reclaims power from external chaos. When wealth wanes, the mind remains sovereign. Mastery shifts from numbers to nature, to live rationally, courageously, calmly in a volatile world where the richest asset is tranquility. The investor who adopts Stoic philosophy acquires not just diversified assets but diversified resilience. In booms, humility; in crashes, composure. The final dividend is wisdom, the compound interest of perspective. Markets fluctuate, character doesn't.